Okay, you could see my screen now. Can you guys see my screen?
Yeah.
Right. So the first one is what they're asking is what is a floating and a fixed charge, right? So Kanika, what does a floating charge mean?
It can change time to time.
Yeah. And so when you say a floating interest rate, for example, what does that mean?
It means the interest rate can go higher or lower
Right.
anytime.
Yes. So it is not fixed to a percentage, like for example, if it's 5% or 6%, right? What is the advantage of a fixed charge? Sahil?
Fixed charge is that you're secured in it more than a floating one. That you'll be getting this amount of money for sure.
Mm-hmm. That is from an interest perspective, correct?
Correct.
Right. But in this context, so what does a fixed charge mean?
So what I've understood from the book is that a fixed charge is one where you have control over the assets of the company.
Correct.
And so these are all bookish
Specific
terms.
assets, right?
Exactly. And basically used for long-term borrowings.
Correct. Kanika, what's the why? So when a company, right, where they have these assets and they have borrowed against these assets, what is the advantage or the disadvantage of it?
I'm not get the question.
So a company has got a loan against certain assets what they've got. But if it's a fixed charge, it means that it's specific to certain assets. Correct? What is the advantage as well as a disadvantage of this?
Advantage is that you know that you have to pay that much amount of money. Disadvantage is that when you realize that compared to the floating charge, it's more time to time.
Okay. What about you, Sahil?
So I think the advantage, Anju, is that I knew the answer. I just forgot. Okay. So the answer is that you are sure for the fact that it's a fixed asset. Okay. And anytime the company, no, I knew the answer. Can you repeat the question once again? Because while you were saying the question, I was framing the answer in my mind.
Right. So the question is, what's the advantage and the disadvantage for a company having a fixed charge? Fixed, their loan is fixed to a certain specific asset or assets.
Yeah, got it. So you're asking about advantage or disadvantage from a
Correct.
bank's perspective or from a company's perspective?
Both.
Okay, from a company's perspective is disadvantage is that the bank has taken control of the asset. Okay. And the disadvantage from a bank's perspective is that it's a long-term borrowing and a long-term asset. So it'll take a lot of time in a fixed charge to sell that asset off. So
To
they
sell
might
the
have
asset off from whose perspective?
from the, say if a bank wants to recover the money, okay, and they've taken a fixed charge. I mean, they've got a fixed charge. So eventually, if they have to sell the asset off to get back their money, it'll take a lot of time rather than if they were to take a floating charge and dispose of the inventory and get their money. It's easier to sell off the inventory than the asset.
Okay. Kanika, did you see the difference in your answer to that of Sahil's?
Yeah.
Right. What's the difference?
That I didn't understand it completely.
Yeah, but what specifically is the difference? What did he talk about that you didn't?
The floating charge, I just added a floating charge like that.
He mentioned, because what you were talking about is interest. interest
Yeah.
payment, whereas he was talking about specific assets, right? So the
Yeah.
company, what has happened is, imagine now for you, one of the most you know, key disadvantage for you as a company, if you have got a fixed charge, is if you want to move away from this asset, like you, for whatever reason you want to liquidate this asset, right? You want to sell it off, you're not able to liquidate the assets, right? Because it has a collateral, or it has something against, you know, there is someone, that is the bank, who is there stating, I have more claim on this asset, I am the owner of this asset, so you're not able to do anything, right? Yes, I know it is with you, it's like a mortgage, right? The bank, if you take a loan, a housing loan, the bank will have the rights of that house till you pay off. They are the owners. So in this case, if it's a fixed charge, it has specified, the company specified, these are the assets, and against this lot of assets I have got a loan of 100 million. Now you can't do anything with these assets in the future till you pay off the loan, right? So that is a disadvantage, because your agility, you need to be agile, you're not able to be agile in this case, right? That's the advantage, the disadvantage, so to speak. So what did you how did you answer that, Sahil? Did you put number 1?
No, so to be honest, this question I had answered when I had not read fixed and floating charges. Because this is the first question and this is your first set of corporate finance questions.
Yes, correct.
So we had not covered it. But now when I reread the topic and I reread the question, I've got it on first, because first is quite straightforward here.
Yes, yeah. What about you, Kanika?
This is the set I not see. I saw the second set.
Okay,
Doubts on the second set.
right. Okay, so did you answer this one?
No, I still have to do it.
Right, okay. So the second question, companies limited by shares are subject to the maintenance of capital rule. Which of the following statements regarding the rule is incorrect?
This one I got correct.
Okay. So give me the logic behind this.
So it's second.
Yeah, but why?
Now share is always subject to market risk. That's the answer. So if the company goes insolvent and is not able to pay, then how can the shareholders get their money back? That's why it's a limited liability on their head.
Yes.
But I've answered in a very technical manner, the way you asked the question.
Right. I want to ask Kanika about this. Why? What is the logic for them choosing the second one?
Is it like you have to save up? Is that the capital rule? Or is, I don't know. Or the capital rule.
So what does the capital rule state?
That you have to save up for your for the money you owe to people. It's like a savings account.
So if you read the first one, a company cannot simply return share capital to its shareholders, right? So that is a correct statement, isn't it? You can't just like that return shares,
Yeah, you can't just return share.
right? And if I look at the third one, share capital should be used to further a company's lawful objectives, right? I mean, share capital is brought in to do that, right? If you see in a prospectus of a company, it is clearly stated, I need this share capital, I'm issuing X amount of shares, with these shares I'm going to be doing this kind of activities. So it is quite clearly stated, isn't it? And the fourth one, it says share capital may be returned to the shareholders following an approval reduction of the capital scheme. That's also correct, because if you remember in our previous classes, we said, well, you can buy back the shares from the shareholders,
Yeah, that I know.
right? So these are correct statements with regards to the share capital. Okay.
Okay, but what about the third one? Like the third one can't be the answer.
The third one, where it says share capital should be used to further a company's lawful objectives.
Yeah.
So this is where the share capital, you get the shares, you sell shares. When you sell shares, what do you get? Money. Correct? With that money, the company is supposed to do something. They don't just put it in the bank. They have got the money for expansions or something like that in the company, right? Expanding the company, or for acquisitions, for some sort of growth, to invest in a research and development. I mean, massive investments, right? Because share capital, generally when you have a share issue, you're going to get millions and millions, right? So for example, if I look at the Dubai Investment Parks, there was a rights issue that was done very recently. And why did they do that? They did that because they wanted money. So the rights issue was, if you have, I can't remember the exact allocation. If you have one share, you may have you have the you can purchase. You may choose to purchase one or two shares, right? But you have to be an existing shareholder. So if you're an existing shareholder, you have one share. You have you have the option to buy one or two shares for each one share held. So in Dubai Parks and Resorts, why did they do that? Because they wanted money for the development of the park. Okay, so in this case, it's always you take money for an objective of a company, of the company, right? Is that clear?
Oh, okay.
Right. The third question, if a company issues new ordinary shares for cash, the general rule is that, what did you get, Sahil, in this one?
Yeah, I got this wrong.
Right, what did you
I
choose
wrote,
first?
I chose first one in
Right.
case of public but not a private company.
The shares must be offered to the existing members ratably in the case of a public but not private company. Right, why do you think is not right?
I read it somewhere where a private company has the authority to completely override this. Hello?
Yeah. So what you're saying is, if a company issues new ordinary shares for cash, the general rule is that the shares must be offered to existing members ratably in the case of public, but not a private company.
No, first the question is that if the company issues shares in accordance to cash only, then you had told us that they are done ratably. In the sense, the preference is given to the ones who already hold those kind of shares, and in that proportion. So if I hold say 10 and you hold 5, then I will be asked first.
Yes. Yes.
Okay, but I thought that is the limitation in a public company.
Right.
In a private company, when it goes down, when you read further in the book,
Right.
it says that it can completely exempt that clause. That's why I chose the first answer.
Right. Okay. Okay. But this is applicable to a particular section 561, which sets out the general rule. Okay. But all, unless it's in the general meeting in a private company, it is stated otherwise.
Okay, so you're
That
saying
is-
this rule is applicable for both public and
Yes,
private.
shares must be offered to the existing members ratably, whether the company is public or private. In a private company, where they can actually have their own way of doing things, but it has to be in the general meeting, and then it has to get into the documented as well, right?
Anju, one question on this. One question on this. Can a public company exempt it completely or no, they cannot do it?
Whether a public company can exempt it.
Yeah, I mean, cannot follow this route completely like a private company can do so by offering a resolution, by
Yes.
passing a resolution.
Yes.
So even a public company can exempt it, right?
I have to check that one, right? Let's make a note of this one. I want to check it. So the third one, if a public company can do the same. Okay. Now let us go into the fourth one. If the net assets of a public company are half or less of the amount of its called up share capital, the directors must call a general meeting.
Yeah,
With-
this is easy.
Within what period? So
28 days.
that's clear, right? That's quite straightforward. Kanika?
Yeah, that's straightforward.
Right. Now, guys, there's no logic in this. You need to memorize. So that's the only thing. So fifth one, which three things may be required to enable private company to reduce capital? Which three things may be required?
Yeah, I got this wrong.
What did you put?
So I put in pass a special resolution with usual notice.
But only that one, or you didn't?
No. Amend the statement of no, then produce a solvency statement.
Okay. So that's correct.
I know. Then why did I not choose obtain permission of the court? Although the book says it so.
Yeah.
Tell me.
So it's a book. It's basically the book which states obtain permission of the court, right? Because these are rules and regulation which is already there. It's not.
No, though, Anju, but if you carefully read the book,
Yes.
what I understood is that it says that the private company, if they produce a solvency statement, they do not need to obtain permission from the court. So if you're choosing 4, you can't choose 3. That's what my rationale was.
If
And it
you
clearly states in the
choose-
book.
If you choose 4,
You can't choose 3. This is specifically for a private company. Because it clearly says that if a private company produces a solvency statement, they do not need to have a permission
they
from
do
the court.
not need, or they do not need, right? Or is it
Correct.
a case of you should not?
I think they do not need. Let me reread it.
Okay. If you've got that chapter open, can you read it to us?
1 second, I'm just trying to find out. It'll be under which topic? Confirmation from the
It
court.
will be on the 15th.
Why reduce share capital? Okay, I think I'm almost there. 1 second.
Or
Okay,
is it
see.
either or? Have a look at it.
A private company need not apply to the court if it supports special resolution. Yeah, it says clearly a private company need not apply to the court.
Need not, but does it mean to say, right, they have produced a solvency statement, then they do not, or they don't have a solvency statement, therefore they need permission of the court?
No, I didn't get that. What are you trying to
So,
say?
for example, I have not produced a solvency statement, okay? But if that's the case, do I need to get the permission of the court?
Yes, you have to.
So that is the logic here. You don't need to do both. It's either or.
Either or, got it.
Yes.
Yeah, I got it. Why is it not 5th? What have I done wrong in 5th? Amend the statement of capital and initial shareholdings.
Yeah. Amend
Oh,
the
you can't
statement
do
of
that.
capital and initial shareholdings. Yeah.
You can't amend the statement of capital, right?
Yeah, you can't, I mean, without doing all these things in a very formal manner, you as the company directors, you can't do it. And there has to be some very good logic. You have to pass a special resolution. All these things have to be there.
Okay, fine.
Okay. So that the key learning there is either or rule.
Yeah, correct.
Okay. The sixth one, what have you got, Kanika?
I'm reading it 1 minute.
But Anju, if they ask us a question in a format where they say a private company has produced a solvency statement, and then they give us the options. Does it need to go to the court? It has to go to the court for sure. It's not required to go to the court, and then one more. Then we have to choose it's not required to go to the court. Right?
Correct. Because it's an either or.
Correct.
The fourth option you have to choose, but why is not that?
Sorry, dear, you need to speak up louder.
Fourth option.
Fourth option. In this,
Yeah.
all business organizations can create fixed and floating charges. Now, what is the difference between the third and the fourth, Sahil?
Wait, I haven't got this question. I was not able to attempt it because again, when I was doing through these questions, I hadn't read fixed or floating. So let me reread this. In relation to the
But are they
company's charge.
registered? Is that the difference?
Let us see what Sahil comes up with.
In relation to the company's charges, which of the following is correct? A private company cannot create fixed charges. A public company cannot create floating charges. Both private and public company can, all business organizations can create fixed and floating charges. In relation, which of the following is correct? I'm not sure if one or two are correct because public and private, I think both can create fixed or floating. There's no restriction they've come up with. And I don't know, I think I'll pick 3. What's the answer?
So, what's the difference between 3 and 4?
The fourth is a little too generic. All business organizations.
Correct. So, Kanika, the reason is it's very, very generic. It doesn't really specify, because we got different companies, different types of companies, right? So, in this case, it's saying very specifically both private and public companies.
Anju, to refresh your memory, can you give an example of a business organization which is neither private nor public?
Say, for
Self-proprietorship.
example, mutual company.
Or self-proprietorship? No, that's also private.
Yeah, a mutual company is one of them. Company has got members, and that those members form that mutual organization. This is neither
Okay,
a
so
private or public.
right, because then it doesn't have to restrict it to the private norms.
Correct. It's kind of in between.
Got it.
Okay. The seventh one. So they're asking what statements are true or false.
Okay, I have answered which of the following statements concerning the variation of class rights are true or false. No, but this was from the book itself, I think straight away. The first, second, and fourth are true, the third is false. The answer.
What about you, Kanika?
I've got it all wrong.
You did it the other way around.
Why is the first one for? It's supposed to be the part of the fixed capital which preference shares which shareholders are getting, but it's the same thing.
So in this case, they're talking about the preference shareholders, right? Which of the following statements concerning a variation of class rights are true or false? Variation of class rights.
Yeah, okay.
When you're say for example, you have a class right and you're changing that class right. That's that variation. Now the third one, it clearly says reducing the voting rights. So voting is a right given to that particular share. If you're reducing that, right? If you're reducing the voting rights, that means there's a variation. Now issuing new classes of preference shares, it's not a variation. Returning capital to the holders of preference share, it's not a variation of rights. Okay? It's not a variation of rights. There's some changing taking place, but it's not a variation in rights.
I know why I got it wrong. I read the question in the other way around.
Mm-hmm.
I thought they're asking, that's why I got exactly the same opposite true false.
Yeah.
I thought they're asking what are the exceptions in the case of variation of class rights.
Right. Okay.
But they're actually asking which in this case is a variation of class right.
Correct. Correct. Is that clear to you, Kanika?
Yeah, it is.
Right. Now, authority given to directors to allot shares can be granted by?
I have written one.
Okay. What about you, Kanika?
Same.
So in this case, what we're saying is the first one, provision in the articles only, right? But it's not only in the articles. What they're saying is it's part of the ordinary resolution, a special resolution, or provision in the articles. All of these things, right?
No.
It's saying, so ordinary resolution, a special resolution, or a provision in the articles, right? Because others are saying you have to only pass a special resolution, right?
No, one second.
Because the fourth one is giving us 3 different options by which these directors can grant or allot shares.
But that's wrong, Anju, right?
No, it's not wrong. The reason is, the first one is saying provision in the articles only, right? One is saying special resolution only. The other one is saying special resolution or provision in the articles only. Okay? But the fourth one is the only thing that covers. It says there are 3 ways you can give: through ordinary resolution, special resolution, and a provision in the articles. Any of these can give the directors that power.
I'm not finding this now, but when I remember when I read the text, it says a provision in the articles and a special resolution. It did not specify ordinary resolution anywhere.
Okay, so let us take that down.
Can we just check it once?
Yeah, I will check that one. Question 8.
It's not like ordinary resolution, this special something. What was that called? Request? Alright.
So even if I don't remember now why I took the first one, my question to myself is also that even if it is articles and special resolution, why did I not choose 3? You know what I mean?
Yeah, because you thought it was special resolution and articles. So that's why you're saying, why didn't you choose 3?
Exactly. Or is it that I thought that when I read the text, now I'm not able to find it. I think I'll reread the director's text. That it's not or, it's both a special resolution and
so we will
a
check the
provision.
validity of that, Sahil.
Yeah, and because I could not find this option anywhere, I gave precedence to a provision in the articles only because that is more important.
Okay, fine. So the 9th one, which of the following may give financial assistance to another company for the purchase of its own shares?
No, I did not get this.
Sure. These certain types of companies can get assistance to purchase its own shares. Right?
Is it that buying their own shares for cash? Is it that one?
Correct.
Can you elaborate on this, Anju?
Right. So, in certain cases, right, certain companies, they can get assistance, a loan as such, to purchase shares, their own shares. Okay. Now, obviously, a public company will not be given this facility, right? Why do you think they will not give this facility to a public company? Why do you think?
Public companies are meant to be more transparent.
Because suddenly you're increasing your debt, right? For no apparent reason but to purchase shares. So why are you purchasing shares? Okay.
How are you increasing your debt?
Because you've taken a loan, right?
To buy those shares, is it?
Correct. So which of the following may give financial assistance?
No, but
Financial
tell me
assistance.
something, Anju.
Yeah.
I have one question here. Say, as a company, I'm making profit. Okay, I've got surplus money now after doing some business. Using that profit, I'm buying my own shares back. So how
That's a
am I
different. No, no,
increasing?
no. The question is financial assistance. Financial assistance, if I give it to somebody, I give it in the form of a loan.
Ah, okay.
Correct? That's the question.
Okay, okay, got it. Got it.
So only a private company is allowed to do that.
Got it.
Okay. Kanika, is that clear to you?
One question, one more question. Okay, I'll note this answer down. It's a private company who's allowed to do that. But one more question on this. Slightly digressing. So, say I'm a company and I've earned profits and I've bought my own shares back, which I gave in the market. Okay. So, am I reducing my share capital with that?
You're not reducing your share capital. Your issued share capital is reduced, as in
Got
your,
it.
paid up share capital has reduced, kind of, because you have less people now out there for whom you need to pay dividends and things of that.
So, have I decreased my liability?
Yes, you have.
Okay. But I have reduced my issued share capital.
Correct.
Correct? But my
Yes.
share capital remains the
The
same.
share capital, the whole capital remains as is.
Got it. Yeah,
Okay.
got it.
Yeah. The 10th one. Which of the following is an allowable use of the share premium account?
I have a doubt for the ninth one. You said you explained everything about the private company, but the question says which of the following may give financial assistance to another company, as in that's for private to private company. You
Which of
mean?
the following may give financial assistance to another company for the purchase of its own
It's old
shares?
shares. Yeah, this is another company, not the same company.
So
No,
they
I
are,
think the question is on the lines of finding that company, whether it's a private company or a public company. That's why they've asked the question smartly. Which of the following may give financial assistance to another company? That is why they are saying another company. Now, basically, it's like a fill in the blank. What is this another company? Is it a public company? Is it a private company? Or is it both? Right, Anju?
so in this case, which of the following, that is a private company, public company, both private public companies can give financial assistance to another company? I think Kanika is right here because they're saying which of the following, right? But
Which of the
what we just described now is a private company, right? So what we described earlier is a private company also can get financial assistance, right?
okay, 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 okay.
But in this case, who can give financial assistance to purchase? Yeah, that's the
Got it.
logic.
So then the conclusion is, Anju, is it that a private company is the one which can be the sender and the receiver only?
Now the public companies can purchase their own shares, but there are certain regulations to that they need to follow. They can purchase their shares, but it clearly states what needs to be followed. Right? So if you can look into your textbooks, right, and check what does a public company need to do to purchase their own shares?
Right now?
Yeah, just now, if you can look at it.
private company can't give it to a public company its shares for financial assistance.
But a public company can purchase their own shares. What are the conditions that they have to meet?
No, I'm not talking about their own shares. It's like a public company and a private company, and one of them is in debt, so they borrow the other company's
No, dear.
shares.
Forget this question. Forget this
Oh,
question.
okay.
I'm just asking. A public company, they can buy their own shares under what circumstance?
It says
Oh,
on
okay.
treasury shares.
Treasury shares, that's what they call it.
They
Yes?
have a limitation. They said these are created when a public limited company whose shares are listed on stock exchange legitimately purchases its own shares out of distributable profit,
Exactly. So they
up to
have to
10% of its
make
shares can
enough
be held in
sufficient profit, right, to buy these shares. And they also say only certain percentage of those shares can be put out as a reissue. Am I right?
I think 10%.
Correct. Very small amount. It's not a big amount they can put out again. Yeah. Okay. So shall we move to the 10th one? Which of the following is an allowable use of share premium account? So what is a share premium account?
Share premium account is basically the premium you earned from the shares is a credit entry into this account.
What is a premium? What do you mean? Give
Say
me an
I have
example.
okay, say for instance, the nominal value of the share account is £10, but when you sold it in the market, you sold it at a profit because the value of the company is very high and the demand is really high of those shares. So as for the market price,
So how
you've
much
given
did
it
you
at a
sell? How much did you sell it?
say I sold it for £50, so that £40 is a premium,
Right.
and that goes into the share premium account, and the £10 goes into the share capital account.
Okay, brilliant. Very good accountant. Okay. This used to be, I just could not understand it when I used to study. I just could not get it into my head.
Now, because I'm studying corporate law from you from the last 3 months, I've actually mugged it up. So it's got nothing to do with accounting.
So it is very important because actually this comes into when you're doing CO1.
Okay.
Sorry, CO2, right? Which is in the transactions and the accounting side of it. Then it'll make things very easy for you, because this used to be a very difficult area for me. I couldn't figure it out because I could not get the logic behind it, and
Okay.
just doing memorizing is not helpful.
Yeah, that's true.
Yeah, accounting especially you cannot memorize because your
Yeah, you
debits and
cannot.
credits will change depending on the situation,
Yeah.
right?
But I think as a golden rule, they give certain rules where you can memorize that if it's this kind of an account, it's normally a credit entry. And if it's this kind of an account, it's
Yes,
normally a
that is
debit
also
entry.
there. That is also there. That's why, and that's there. However, there is a lot of this, depending on the scenario, things change as well. So then it becomes a bit confusing, right? Kanika, you all right?
Yeah.
Okay, so what we're gonna do is now we finish the first section. I'm
No,
going.
no, hang on. What
Yeah?
is the answer for question number 10?
10 is the first one, to pay issue costs in respect of new shares.
Really?
Share
I thought
issue.
it's 1 and 2. 1 second. Let me research
Which
this.
of the following is an allowable use of the share premium account?
Okay, 1 second.
To pay
So
issue
where
costs, to pay capital costs on forming a company, right? To pay dividends, to repurchase debentures. So of that, the thing that you can do is to pay issue costs in respect of a new share issue.
1 second. So it says two things here. Uses of the share premium account. One is issue expense and commission in respect of new issue share, which is your answer one. Why I chose to pay capital cost on forming a company, because it also says fully paid shares under a bonus issue, since the operation merely converts one form of fixed capital into another.
Sorry, say it again slowly.
It says fully paid shares
right?
under a bonus issue. Since
Okay.
the operation merely converts one form of cap.
So that's about a bonus issue, right?
And what have I done? To pay capital cost on forming a company. Okay.
Okay, bonus
Okay,
issue
fine.
is you're not paying anything for those shares. I have money in the share premium account, and out of that, I'm using it for
What
bonus
does
shares.
this mean, Anju? What does this technically mean? Issue expenses and commission in respect of a new share issue.
Right. When you're trying to do a share
Oh,
issue,
okay. Got it.
the
When you're trying to,
expenses. Yeah,
yeah. There are expenses incurred when you publish a share.
correct.
So you can use those in share premium account.
Yeah.
Okay.
So
Through
what's
share premium.
happening, Sahil and Kanika, is with this share premium, there are things that we can use it for. We don't need to put it under our profit and loss and use it, take it into a P&L. That's what it's saying. It's not our operational expense. I mean, this is not an operational expense, correct? This is something, it's one-off thing that happens, and it is happening related to our shares. So we are trying to contain it in that space. Yeah, I've got extra money with my share premium, so therefore I'm able to use it.
One question. I've made a huge profit on my share premiums. And I've kept that in those books, okay? But in few days, in the next few days, something happens and I've incurred a huge expense. Will I be able to, as a company, take the money out from my premium account and clear my expenses?
No, if you're running an operation, you have been operationally inefficient. That needs to come out. You can't hide it against the share premium account. That's manipulation.
Okay. So I'll be taken to court for that.
Correct.
So,
Because what
okay,
they will do is, you're operationally, you have been inefficient.
Okay.
So I'm hiding it somewhere else to park
What
it
if I
somewhere
don't
else.
hide it? What if I don't hide it? I make it open to the public that we've made a loss,
No,
but so
still you can't. These two are different things.
what's the point of this premium money then?
So the premium money is utilized for certain things. It's very clearly stated, certain things. I mean, this is where Shell got into a lot of problems. Right? Because they had reinstated their revaluation reserve and done all kinds of things, right? To make their statements look very good.
Got your point. Fully paid shares under a bonus issue. So that means you can reissue more shares as bonuses, is it?
Correct. Yes.
Well, what's the point then?
Yeah. So why would you sell? I'm going to give you bonus issues. I'm not giving you a dividend. This is what happens.
But eventually, this bonus, when they sell off the shares, the creditors, you have to pay them, right?
Yes. So the thing is, bonus shares, what happens in reality is, I'm a company, both of you have 50-50 shares each. So I'm saying I'm going to give you guys a 1-to-1 bonus.
Correct.
Right? Instead of paying dividends. In this case, what actually happens is physical money is not going out.
Correct.
Okay? With the money I have, this is a book entry that's passed.
Correct. But
what happens is, the volume of shares increases. Instead of 50, you got 100. Now, as soon as a bonus share is issued, right, generally the share price depresses a bit or reduces in the market, because the market gets flooded with more shares. However, if the company is a company that's doing well, it may dip a little bit, but still it will go up. Imagine you hold shares of Google, right? Google shares are fantastic. Let's say you purchased Google shares 20 years ago, right? That price would have been amazing price you got it at, compared to the market price now. If Google comes and says, right, I'm going to give you shares, bonus shares 1-to-1, right? It's a great opportunity for you, isn't it? It's a good return. It is a return, actually. right? Because suddenly, let's say you're getting $800 to your hand per share. That's what it is. That's what it's actually stating in this case. Instead of giving you physical money as dividends, they're giving you shares. But a company that's doing really well, those are the companies that will go in for bonus shares. Does that make sense?
Yeah, it does. I'm still trying to figure the fundamentals of shares here. So, you're saying that the share premium account with bonus issues, I'm not actually handing off the money. I'm just issuing them bonus shares. So I'm retaining the money with the company.
Correct.
However, when the shareholder has to sell off his shares, this he would be liable to,
See,
the company will be liable to pay him,
so
right?
hang on for a second. Now, when the shareholder sells his shares, okay, he sells it in the market. We don't have to pay anything at that point.
When you say we, you mean the company.
Correct. The only time that you will have to pay is if I'm closing the company completely. I go into liquidation of whatever reason, I close the company.
Okay, now now I'm understanding the dynamics.
Right? Otherwise, you sell your shares you sell it to Kanika. I don't want these shares. You want to sell it and you sell it to Kanika. So Kanika pays you, right?
Got it. So you can only sell your shares to individuals or people outside in the public. You cannot sell it back to the company.
Correct.
Or you can sell it back to the company also.
No, you can't. Unless the company
Okay.
decides to buy a certain number of shares, it will go and purchase shares, but it's not going to ask each individual, okay, I want to buy your shares, right? That's a different story. But when it comes to the company trying to pay the shares of an individual, it never happens unless you're actually closing down the company.
Got it. And then what is the concept of reduction of share capital? So this is not linked to company buying the shares. I mean, I'm asking you, say for instance, I've issued a certain share capital. Okay.
Yeah. So that's where
And then
you want to buy your shares back, right? Then what's issued in the market. And for various reasons, there might be multiple reasons why the company would want to reduce.
yeah, which is stated in the book that I want to gain control, or
Correct.
I want to reduce the control of a certain individual or an enterprise.
Yes.
So that is what effectively reducing of share capital is, when you are actually wanting to buy your own shares back.
Correct.
And you can buy it from the public or from whoever.
Yes.
And because it's not a very straightforward case, it's an exception case, you need to follow certain rules, special resolutions,
Yes.
take the order from the court and all that
Yeah.
thing, right?
Yeah.
Got it.
Because why are they buying shares? For what reason? There has to be some kind of a logic behind it.
And that is why you said, sorry, I'm going back and forth here, that bonus issue can only be issued by companies which are doing really well.
Correct.
Because I would love to have bonus shares of a company which is doing really well and
Yeah.
having good share premium accounts.
Yes.
Because tomorrow, if I have 100 shares and I get another 50 shares as bonus, if the company is doing well, only then I will be able to sell it off. And it should not
Exactly.
become a liability for me.
Yes, exactly. I mean, then it is great. It will not become a liability to you because you got it for free, in effect, right?
And they can be liquidated easily.
Correct. Because suddenly you've got, instead of $1,000 a share, which is traded in the market, you got it in the form of a share and you're able to sell it.
Perfect, Anju. You made me a share trader. Now tell me, where do I invest?
This is a good question. You know why? Actually, I would want you guys to invest. Start investing and start with small amount of money, right? Like really small amount of money. I'm doing a course for locals, high national diploma course, accountancy course for UAE nationals, and there is one guy two people who invest in shares out of a group of about 25, and you can see the way they think is very different.
I agree.
right? They come up with all kinds of things, and how they analyze, how they evaluate. One is much better than the other, but the people, the other rest of the team, not that they're dumb, not nothing like that. It's just that exposure. So
Yeah,
if
yeah.
you
But Kanika can't invest in shares, right? Or she
why
would take her dad's money to invest in shares.
Yeah, do some work, Kanika, with your dad, and earn a little bit of money and get that money, even 3-4 thousand dirhams.
That's it.
Yeah, just ask your dad, tell him, how much minimum that you need to invest.
What's the minimum though? Like 3-4 thousand?
I don't know really. I don't know how much in the Dubai Stock Exchange, how much you need to invest, but you should.
But can you do trading in Dubai Stock Exchange?
Of course you can. Of course.
Okay, okay.
And there was one
Where?
guy who was investing in the Dubai bonds. And he was giving a logical, because I asked the question, I want a presentation on what companies you will invest, why you will invest, and things like that. So he gives a very good justification as to why you want to invest, because he wants, he says, because the company, this Dubai bonds company, they will specifically state what type of projects they're investing in, and he says it's linked to the government, and the government does very good work. So he doesn't want to invest in any other company, private company. He has a lot
Got
of
it.
faith in the government. So they're doing this hotel project, this particular infrastructure, all these things, which
So
is
Dubai
great.
bonds is basically the bonds coming from the government directly.
Correct.
Okay, okay.
Is it national bonds, that one?
Might be, I'm not sure. And then he was also saying that, but locals as well as expats can invest in it. And he was also saying that if you have invest more than 100,000, that you get kind of relationship officer who will work with you.
Anju, is this also true here in Dubai that if I buy a house here, then I will get a 99-year expiry visa?
It is very subjective. That's
You
which
mean,
was told many years ago, right? Many years
but
ago.
now in new
Now
properties
it
it's not.
doesn't work. No. I
So
have
tell
my
me something.
doubts.
If I buy a flat here and tomorrow my visa expires or my employer chucks me out or I plan to leave the job, what do I do with that property? Nobody is going to buy real estate in Dubai.
Well, you'll have to rent it.
And if I have to come back for maintenance, I have to come back on tourist visa.
Correct. I mean, depends what type of visa you're on, passport you're on, of course, right? But the thing about it is, again, I was talking about to the students. The Dubai Stock Exchange is very young. It's not an old established something like London Stock Exchange or in the US or whatever. So therefore they just evolve, they bring in rules, they're evolving. It's the same concept with the property here. I mean, it's very 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 new, less than 20 years. So you can't expect what is there in a very old market like London or Australia or even India. In India you would have very very strong rules and regulations with regards to your property, correct?
Yeah.
Right, the Indian rules and regulations will be great. It will be fantastic, whatever it may be, because you're dealing with a huge population, right? And it's a very very old country. So you have that experience, whereas this country is not old. And when did they start selling properties? Just 20 years ago. You will have very clear rules as to who can own, who cannot own property. And when it comes to the high rises, what can you do, what can't you do? If foreigners can invest, what portion of that can be invested? If it is, when it comes to certain taxes, how do you transact the property, how do you transfer properties, what sort of charges are levied, how can you search for property valuation or the deeds. All this will be very clearly stated. right? I mean, it is only recently here that they brought in this, the Dubai, the registration, land registration, and having all the clear ways of doing things. But that's what it is. It's evolving. All right.
Okay.
So what?
How's it?
Yeah, go on.
How's it evolving?
Because imagine it's like a small child and like an infant then going into the stage of running, right? So an infant doesn't straight away, I mean, as he is born, he doesn't go running, correct?
Yeah.
So it's the same concept where in this case it needs to take its course. People need to understand how things are done, the local as well as when it comes to people in the how do you one second, the other systems in place and so on. So it is quite a challenging thing, but it's easier for them because they're not the first country in the world who is starting something, right? If you look at Airbnb concept, now they were the first to start something like that, and they got into a lot of hot water because the rules and regulations were not there, and they had to find them and adapt to them as they went along. Even the same with Uber, right? So that concepts were never there. They were the first to do it. I mean, when it came to e-commerce as well, it's the same thing. The governments didn't know what to do. Suddenly they see, money going here, there, everywhere. How to tax these people? They had no clue, right? They know this is happening, but they couldn't figure out how to tax, how to bring that upon them. Okay, so evolving is it will start somewhere, then change according to what's happening in the environment.
Okay. What are you gonna do next class?
So what I thought was doing was chapter 16, right? That is related to borrowing, okay? And then do section 2 as well, the questions. I think we can do chapter 16 pretty fast because you would have gone through some of it. I was thinking of having the next class at 6. Is that fine with you?
Oh, okay.
What about you?